Perfect. So I will go ahead and kick it off so we can get the chance to listen to this great line of speakers today. And then we'll just wait for everyone to hop on. Well, hello, everyone. Good morning, or maybe good evening or good night for some folks out there. We have an exciting audience from all around the globe. So thank you for joining us. Today, we have a great line of panelists, which I will leave for the moderators to introduce. As you all know, this webinar is brought to you by both Takeoff, the leading nonprofit organization that's building bridges between Silicon Valley and the MENA region to support high growth entrepreneurship. And it's also brought to you by Silicon Valley Bank, our partners, which bank the most innovative companies and funds from around the globe, including a strong presence in the UAE, as well as a growing footprint in other MENA regions as well. So thank you, Silicon Valley Bank. A few house rules, I would say, your videos can be on and off as you wish, but if I can please ask you to keep your mics muted so everyone can hear the speaker very clearly. The way today's webinar is going to work is I'm going to pass it on to Priya first from Silicon Valley Bank, which will give high-level insights on the US venture landscape in Q4 2020. We'll then pass it on to Philip from MagNiTT, which will give the same high-level insights for the MENA venture landscape in Q4 2020. And then I'll pass it on to Noor, which will host the panel for 30 minutes. Noor is a board member here at Takeoff, and then we'll open it up for Q&A for 20 minutes. Again, thank you for joining us. And this is really exciting. I'm excited to hear everyone. And I'll pass it on to Priya now.
Thank you so much, Tawfiq. Good morning, everyone. Good afternoon, good evening. From wherever you are dialing in from today. Thank you all for joining us. And we're excited to talk about the state of the MENA VC ecosystem. We're going to kind of do a look back, but also as we're nearing the year end, but also peek into what's to come into 2021. We're excited to host this webinar with friends and partners of TechWadi, and we've been friends for years and looking forward to doing a lot more as we're building our footprint in the MENA region. And we have some terrific fund managers today to give us their insights on the current investment climate. As a way of introduction, my name is Priya Rajan, Managing Director, as Tawfiq mentioned, as a part of Global Gateway team, which does international business development in the new and emerging technology markets from around the world. I manage the MENA and the India market for the team, and I work closely with funds and founders from the region with their cross-border banking needs and more. I'm going to take you a few minutes to share some high-level insights from our Q4 state of the market from a US lens. Tawfiq is going to share some of the slides. So Tawfiq, if you can share the first slide.
So I think it's going to be Nadine, which will be
Nadine, yes, please.
Perfect.
And feel free to post any questions that you may have in the chat, and we'll get to it at the end as we have time. If not, obviously, we'll follow up over an email as well. The slides that we picked was, based on the audience today, there's a good mix of fund managers and also founders. So we wanted to see what's relevant to you all, so we picked some of the slides, but there's a lot more data to go with it. Nadine, let me know when it's ready to go.
Yeah, just a second. Tawfiq, can you grant me host access, please?
Done. Regular Zoom technical difficulties. Awesome.
Thank you. Just moving on to the first slide. Great. When the pandemic first hit, most of the investors feared that we'd be heading into like a bear market that's going to keep going on forever and potentially even a recession, that we had years before, similar to dot-com bust or the global financial crisis. But, to all of our surprise, the public markets have rallied back of, optimism surrounding like the stimulus that has been kind of fueled into the economy around the world, but that also kind of that also has kind of brought the fears down and the worst case scenario, right? So I think that's kind of an optimism going in. Tech led the way as much of the industry benefited under the new normal, and investors definitely continue to flock on high quality companies with large capital. So moving on to the second slide, and all of these slides would be shared with you post the call with the full deck as well. Most of the countries have provided, as I chatted earlier, has provided monetary and fiscal stimulus. and pumping trillions and trillions of dollars into the economy. The inflow and the inflow of the stimulus and the low interest rate environment has created a significant pool of capital seeking a return, right? We expect this excess capital both in, pushed into both the public and private markets, and to keep the valuations high, despite the, other indicators signaling potentially a slowdown, and potentially even hitting a cap. Moving to the next slide. One of the things that we're also seeing is there was an expectation early on that the VC fundraising specifically would slow down, and if fast forwarding it from February or March to now, definitely that has not been the case. VC fundraising is the highest and has been the highest since 2000, and the dry powder has hit the record level of almost $152 billion. I would say the three dynamics that have contributed to the strength of the VC fundraising are, as highlighted before, the unprecedented, the government support that has come from across the globe through monetary and fiscal policies, a lot of capital seeking return, some of which is allocated to private market and public market assets. A second one is low, specifically on the US side, low interest rate environments, the low returns, that's decreasing, attractiveness is a potential substitute. So folks are leaning in more to do other diversification of their investments. The third one is high volatility and concentration within the public markets. All of these have contributed, to the strength of the VC fundraising angle. Moving on to the next slide. As the pandemic started to take shape, the companies were pretty quick, and we saw it in our portfolios and worldwide. Folks saw it as we talked to the VC emerging managers as well and fund managers, to cut the operating expenses to extend the runway. The time of the runway differed region to region, and love to hear Philip's perspective on this. Referring to the previous state of the markets that we showed, the data showed that payroll expenses declined as contracts weren't renewed, bonuses were frozen, inflated salaries were kind of pared back. But each of these scenarios kind of differed across different regions. Different countries handled it much differently, depending on the cost of human capital. Simultaneously, companies also tapped into the debt markets and raised another equity round to put more cash into the balance sheet, both extending the cash runway to survive the downturn and make potential acquisition as opportunities raised with the right valuation. One of the things that we saw within SVB is if we're holding for startups that are post-Series A and are venture-backed and that are at targeting global markets, and that could potentially be a candidate for venture debt in US. Those are the conversations that we were having as well, and we were quite busy, especially during this time when founders were looking to build that cash runway along with their equity raise. Moving on to the next slide. I would say as the uncertainty remains, I think there's still, there's still economic climate, how that's going to kind of impact on all of this that's hitting us. And the cash runway continues to remain top of mind for our clients. I think what we're seeing on the US front is, the cash runway continues to climb closer to the 24-month benchmark that the VCs are recommending for the portfolio companies. Again, curious to hear and from our panelists today, and also Philip, on what is the outlook on the MENA side as well. And moving on to the next slide. So the VC deal activity has definitely slowed down across all of the stages, but at different rates. Interestingly, angel deals have been less relatively resilient, as angels have, it's more relationship-based, very close connections to founders they invest in. It's less about the tech, more about the people, which makes it easier to do it, to complete end-to-end over Zoom. C to Series A have seen the sharpest declines because they require a little bit more trust and belief, not just in founders' ability, more on the soft skill, but also quality, the ability to deliver. That just means a lot more kind of understanding how their, understanding of the product and, their skill to execute those. Late stage has decreased the least, as these are so-called, we call it spreadsheet deals, depend upon the analysis of company fundamentals, which are not available at the early stages. So they continue to do how they're doing and has decreased the least. I think that's the last slide, Nadine. I think if just a closing, what we'll say is, venture ecosystem is on a more stable footing. We can stop the slide share. Venture ecosystem has been on a more stable footing than expected at the start of the global pandemic. There is still plenty of hurdles to clear before the broader economy is back on track. But we at SVB believe that the innovation economy will remain resilient. This is just we picked and chose some of the data that was relevant to the audience today, but we'll share with you all the link to the complete Q4 state of the markets. And we do this on a quarterly basis. We have an amazing team that has macro insights, but also work with some of the best, as Tawfiq mentioned, innovators around the globe. And we put the thought leadership reports on a quarterly basis. We're happy to share along. But thank you again for all joining us today. And thanks to TechBody for this opportunity. And the speakers, very excited to hear your insights. Now, I'm going to welcome Philip from MagNiTT to share some insights on what's happening on the MENA market, both on the VC and tech perspective. Philip, over to you.
Thank you very much. I hope you can all hear me. Absolute pleasure to be here today and to present to all of you. I don't have as much detail as you guys do because clearly there's more data in the US than there is in the Middle East. But what I aim to do is to provide somewhat of an overview of the state of the ecosystem in MENA for those that may not be as familiar with it, and then to kind of deep dive on the effect of COVID. For those of you that may not know MagNiTT, we're the leading venture data platform for the Middle East, and our focus on data aggregation, similar to your Crunchbase or PitchBook, and research and analysis. So effectively, since about 2010, we've tracked something like $5.5 billion worth of venture investments across the whole of the MENA region. And since I founded MagNiTT back in 2016, we've definitely seen an acceleration in the growth of venture capital here in MENA. This chart, which basically depicts the venture capital and deals that have been taking place dating back from 2015, the red amount being disclosed funding, the gray amount being undisclosed funding, and the black amount being mega deals. And just to be clear, we're currently working on our year-end report. So all of these figures are as of Q3 2020, highlight that when you strip out those mega deals, which tend to be Karine, Souk, and recently EMPG and other big deals that have happened here in the region, you've seen an acceleration up until 2019 in the number of deals and the underlying venture capital investments. To date, we've actually got close to $1 billion worth of investments, but we have seen a steady drop in the total number of investments that have happened in the region. Again, MENA is effectively 17 countries crossing GCC, Levant, and North Africa. And I think it's always important to put that into context when you say that, how does that fare? So for the 2019 figures, while you have seen this growth in a very nascent ecosystem in the region, really it's still incomparable to the US or Europe, which is not a fair comparison, but you can pretty much put it down to the same amount of venture capital that's been put into startups in the Netherlands. And therefore there's still a complete disconnect between the demand and supply of capital for startups in the Middle East. And how has it evolved during this period? Interestingly, as you've seen more deals taking place, you have seen in absolute figures a larger percentage moving towards later stage deals. And that has definitely shown some maturity with, up until last year, a record number of exits that have been taking place in the region, showing growth and returns to many of the investors. This year is a slightly different situation. When you look at it from a country perspective, though, what has become extremely clear is that there's really three leading ecosystems by geography. The UAE, which is probably the most developed, going back to the celebration of entrepreneurship back in 2012, is the leader by number of deals and amount of capital for startups that are headquartered in that geography. This chart, which depicts the number of deals, shows that Egypt comes second, given the large size of the population, the developing ecosystem of entrepreneurship at an educational level and a postgraduate level, and the large opportunities that you see with investments coming from specifically international support mechanisms. Saudi Arabia, though, and I think this will be very reflected in the end of year report, was the fastest growing ecosystem, both by number of deals as well as the total amount of capital deployed. In fact, the only one of the three countries in the top three that saw a percentage increase in both year over year. Historically, geographies like Jordan and Lebanon, though, have kind of petered off as many of the startups have focused on those three larger economies in terms of entrepreneurship activity. And here you see the percentage that's going to startups in each headquartered location, as highlighted by the startup. And you can see that the UAE remains the country which has the lion's share of activity across the whole of the region. Interestingly, when you look at it from an industry perspective, not completely surprising, the three largest or the 4 or 5 largest industries in terms of the amount of deals that have taken place remain infrastructure pain points that have been solved using solution. And this year, those that have seen an increase in the demand for their products, whether it be e-commerce, fintech, food and beverage, and healthcare. We're currently reclassifying technology, so it's slightly more granular, which will come out in the end of year report. And actually, in terms of the total amount of capital that's being deployed, again, you're seeing that e-commerce, food and beverage, and fintech, as well as healthcare, are those industries that have seen the largest amount of capital deployed in startups across the whole region. And that is a trend that's continued from previous years. Also, not something that is completely unsurprising that that's similar across all emerging markets. And as we recently launched our Pakistan and Turkey report, very similar trends that are happening there. And as we cover Africa and Southeast Asia, we're expecting to see the same in those ecosystems. But over the last couple of years, you have seen funds being allocated by governments to spur on innovation across the whole of the region. It's clear to say that at the top of the government's agendas is innovation and technology as a tool of kind of developing the economies. And this will continue to grow in the years to come, despite the challenges of COVID. But just to take a second on what happened with COVID, I think what was quite interesting is when you break it down by quarter, actually H1 of 2020 was a record year if you were to look at the figures at the high level. The total amount of capital was higher than any other H1. And of course, all of you that are very familiar with the industry, and Priya alluded to this, fundraising takes generally 9 to 12 months to close a deal in the MENA region, at the best case or the worst case, let's say. So many of the deals that were done in Q1, if not in Q2, were lagged backwards to discussions that were taking place at the tail end of 2019 and into 2020. What we saw in Q3, and we are now seeing in the data showing in Q4, is a marked drop in the number of investments that have taken place and the amount of capital that's being deployed in the region, showing the lag of that investment activity to year end. And we anticipate that Q1 2021 will further see a slow quarter, while VCs will continue to close their funds to be able to deploy. I think it's not just the startups that are seeing this slowdown in activity, but also the VCs that are having to raise funds and seeing a slight slowdown in their ability to raise funds to then deploy into the ecosystem at large. And the summer month was the beginning of the tail end of that activity. A season which is often quiet for the Middle East was definitely quieter than any previous quarter on record, dating back all the way to 2018. One thing we had predicted at the beginning of the year that's quite interesting was that this year would be a record year for the number of exits. Interestingly, it hasn't been the case year to date, and given that we're in December, unlikely to year end. One of the hypotheses that we have is, given the challenges that many startups have been facing, whether it's cash flow, trying to define new products, whether it's to retain staff and continue to grow, many have been hampered in the valuations that they've been able to ask for, and therefore, one, unlikely to have gone through M&A activity, or two, many of them have yet to be disclosed because they're waiting for the new year to kind of use that as a catalyst to promote that activity. The deals that you saw at the beginning of the year on average were large deals that led to the record amount of deployed capital, the likes of EMPG, Kitopi, Visita. But when you then compare that to the activity that was taking place in Q3, you can see a marked decrease in the average ticket size of the largest 5 deals. to put into comparison. What you have seen, though, as a result of those larger deals is across the board, larger ticket sizes by stage, as startups have tended to raise larger rounds to weather the storm of the current challenges, as opposed to shorter rounds that traditionally used to be the case historically, to allow for bridge rounds that then later spurned on that activity. I also see more education on the part of founders that are looking to be more competitive in their discussions with investors. And there are more investors historically now than historically that have been investing in MENA-based startups, which also puts competitive pressure on the rounds that are being raised and the valuations. So I will leave it there to allow for time with the panelists as well. I will also share in the group chat for anyone that's interested the H1 report for you to be able to download.
Awesome. Thanks, Philip. I saw a number of people on the chat were like, wow, the reports from MagNiTT. I completely agree on the data that you guys provide. I will pass it on to Noor to run the panel. Handing it off to you, Noor.
Thank you, Tofi, and thank you, Philip. It's always fantastic to read the reports. I'm so glad you guys do this work for the VCs and the investors to really always have a pulse on what's happening in the region. So with that, I want to introduce the panelists. I'm not sure who to start with, so I'm just gonna go ladies first. So first we have Karine, who is a founding partner at Tamar Capital, which is a single family office based between the US, UK, and Lebanon. Which sounds like most of us on this call, based between 2 or 3 countries until COVID hit. Karine is someone I've had the privilege of knowing for a while and having conversations really around where does social impact or conscious investing meet venture investing. So that's something that we always talk about. And she serves as a venture partner at BNY Ventures as well. So for those of you that know Abdullah and Ghaith. We also have joining us, Dr. Ossama Hassanein, who needs no introduction, however, venture capitalist investing in healthcare, digital communication, enterprise software, sustainability, and I think everything else that we've all aspire to invest in. He's a co-founder or chairman of 7 startups in the US and Europe, engaged in advisory boards of universities, and most importantly, founding board member of Tech Wadi and an instrumental part of the ecosystem. We also have joining us Paul Karger, who is a founder and managing partner of TwinFocus, which is a $7 billion family office that is advisory and asset management between Boston and London. He was also co-founded businesses and led investments in telecom infrastructure, environmental services. So really across the board, a renowned investor. And Mathew Salloway. Mathew is a CEO of a global family office, GSI Ventures, standing for Growth, Sustainability, and Integrity, which represents a member of the Saudi royal family with a focus on venture capital and cross-border market expansion into the MENA region. He's also the co-founder and managing partner of SIP Global Partners, an international performance venture fund investing in global tech companies and anchored by a top 50 global corporate. So with that, I hope I haven't missed anybody. If I have, raise your hand. Okay, no, we're good. Okay, so with that, maybe we start the panel. And to the audience, thank you so much for joining us. Good morning, good afternoon, good night, good evening, no matter where you are. Feel free to use the chat to post questions. I don't see a Q&A box here, so any questions, put them in the chat, or turn on your video and raise your hand. Since we only have a certain number of videos running, that could also work, and we can unmute you. And then you can ask your question directly. We're going to have 3 different parts of this conversation. The first is about the economy at large. What are we seeing in tech investing? And what has COVID done? The second is going to be which industries are you excited about, industries or geographies, and what are you doing? And the third part is going to be what are your favorite companies to be investing in right now? And what's most exciting to you personally. So that's kind of where we're going. So if anybody has any other suggestions or anything specific as you Google or LinkedIn or look up these awesome panelists, feel free to post the questions directly and we can ask them as well. So Karine, since I introduced you first, I'm going to start with you. The privileges and the other side of that. So when we think about the ecosystem at large, venture, what Priya presented, and then what Philip presented, and most notably what Philip presented, since we are talking about MENA right now. Where do you see this? What do you question? I mean, he politely said that it was not a record half year for exits, but what I saw was a chart with a record at the bottom. So what does that mean? You know, we've had the lowest M&A in many years. Is this the beginning of the end? Are we doomed? Or is this an inflection point for venture to rise? What are your thoughts on the ecosystem at large and what COVID has done?
Yeah, thanks, Noor, and thank you to Takwadi and SVB. Excited to be here and chat about this. I mean, definitely we can see a lot of shifts, I think, across the world. Just, I mean, there are a lot of similarities even in Priya's presentation and Philip's, you know, there are certain comparisons. And I mean, specifically, if we're talking about the MENA, there are a lot of shifts just in general, even with, I would say, instability in the region and certain circumstances. But I mean, COVID has definitely accelerated a lot of things, as well as kind of, I think, allowed for a lot more, let's say, dry powder to be available. So I think, I mean, given that there is a bit of a slowdown in terms of investments in general, or people being a little bit, maybe not as bullish, I would say there's definitely, there's going to always be kind of this, I would say, this passion for innovation and entrepreneurship as things are starting to shift more and more to tech. Really, I mean, I think we can see this with COVID. There's been a big shift from more traditional industries to specific sectors that are a lot more tech driven and, you know, that are pushing that ecosystem. So I don't think it's the end at all. I don't think we're doomed. I think we're going to see some shifts, and I think people are going to be a lot more cautious, maybe in shifting their investment strategies. I know that we have, as a family office, looked at things in a few different sectors that seem a little bit more, that maybe have a longer trajectory and maybe are shifting more to the remote kind of model, whether it be in like digital health or fintech or any of those spaces as well. I don't want to get ahead of the sector conversation, but I will say, I mean, we're definitely seeing that shift. So I don't think we're doomed. I think there's actually a lot to be done. And the region is going to play a big role, especially I think with the amount of, I mentioned the dry powder, I think we're seeing a lot more companies coming up. And I will say with this one piece, I think valuations in the region are somewhat a lot more reasonable. And we may start seeing a shift from only like a big center in the US to starting to see other areas coming to play as well.
Great, thank you. You know, and I'm happy that you say that, because I agree completely. I think we're at the beginning of a good journey rather than the beginning of a bad journey. Dr. Ossama, in your you know, experience over several, I'll use the word several rather than many, you know, booms and bust cycles and economic cycles, you know, what have you learned? What learnings can you share? What have these cycles taught you in terms of how long they last? Where do we come out of them? Are these shifts that Karine talks about permanent, a permanent shift in customer behavior towards e-commerce? Are they often blips? You know, where do you see the cycle and technology landing post-COVID? And where do you see MENA specifically being able to leverage these customer behaviors? Is it permanent or is it temporary?
Oh, excuse me. Thank you very much. Can you hear me okay? Okay, yep. Perfect. So just as a highlight, Q3 in the venture capital industry has been the best that I've ever seen. And if you look at what Karine was referring to in the case of healthcare, $21 billion were invested in healthcare, of which 13 billion were in the US and 6 billion were in China. There were 5 unicorns, so worth more than $1 billion, and 41 mega rounds, so more than $100 million per round. So it has been truly, truly astonishing. And in parallel with healthcare, including investments in companies that would use, let's say, artificial intelligence for DNA sequencing to create a COVID-19 cure based on the DNA of a person. In parallel with that, in sustainability and clean technology, given that everyone now feels between healthcare and clean cities, there is, of course, a very important link. It has been really quite extraordinary. In the case of the MENA region, a few years ago, we actually recommended a company called Pure Harvest, which is right next to you, for working capital financing from the Mohammed bin Rashid Innovation Fund, which I think today should be actually Silicon Valley Bank. And the company is an agricultural technology, effectively to bring in ways whereby, given that in the UAE, 85% of the food is imported, it can actually be produced locally. In addition to that, to reduce the water consumption by 6/7, so to be 1/7 of the water consumption. And it is actually on a very high growth path right now. It has raised more than $35 million from the Middle East and is expanding in Saudi Arabia. So as much as many people feel we are locked at home and depressed, I am absolutely amazed at about how this third quarter has been from a venture capital perspective, and most importantly, Noor, from the perspective of investing in areas that have a human impact.
Yes.
So whether it is healthcare or sustainability.
I couldn't agree more. And we're very excited about digital health. Priya knows this. We've done 5 digital health investments in H2 as a fund across the MENA region. So we see the numbers as you're talking about the billions globally. Here we don't do billions, but the industry is picking up. Let's pause that conversation for a minute and ask Mathew. Mathew, you do a lot of cross-border things. What are you seeing where you're sitting versus where you're investing? Are there similarities in the enthusiasm for technology, or does MENA have a different opinion than perhaps the US?
No, and first of all, thank you for having me, and it's a pleasure to be with such an esteemed board and organization and moderator group. So thank you. Is my volume okay? Volume okay?
You're good. Great.
So yeah, so I'm based in New York, but the world is so much smaller these days with Zoom, and we have an office in Riyadh as well as in Tokyo. So we're somewhat all over the world, all over the globe. From a US perspective, I think that running a family office, there's just more and more interest in venture. If you look at the Yale University Endowment, which is really considered the gold standard for portfolio construction, asset allocation, in recent years, they've continued to increase their allocation into venture. I think in 2019, it was almost 1/5 of their total portfolio. So in the US, the gold standard is still very much bullish on technology and venture investing. It is really driving the market. Looking into the Middle East, I think there's probably 2 major developments that I see that are supporting that thesis. So we do a lot of work in Saudi Arabia, and following up on Philip and a lot of their great data, Saudi Arabia, $95 million was spent in venture in 2019. In 2020. If you look at the growth, which he alluded to, but just to give you sort of more figures, it was only 7 million that was spent in 2015. So the amount of growth, I think it was 67 in 2019. So in 2020, $95 million, and that's only in H1. We don't have the final data. So there's a lot of family offices. There's a lot of interest in this space. I think you also have to take into account the Abraham Accords, what's happening with Israel, things that are happening in the UAE. My last trip was actually to Israel, Saudi, and Dubai. My last flight was Dubai to California. So I was just there and I speak closely to a lot of folks in the region. There's a lot of excitement in technology transfer. Israel is the size of the state of New Jersey, but the amount of technology and innovation that come out of there per capita, it's the largest in the world. So there's a lot of cooperation, there's a lot of sharing, and there's a lot of investors that are really bullish on this space. So I think we feel globally, this is an area to put a lot of focus onto.
Fantastic, thank you. Paul, let's start the conversation specifically on digital health. So your background also includes investing in digital health and kind of a lot in healthcare as well as sports media and other very interesting industries. But it seems that there's a theme here. So on the digital health landscape, is it overhyped at this point? The billions and billions that Dr. Ossama spoke about, are they really going to change the world? And as you think through digital health, how much of that is the optimization and the incremental improvement? How much of that is the genetic and DNA sequencing? And how much of that is real impact in terms of healthcare inclusion and providing people with access to doctors that previously have had no access to doctors because of where technology has gotten? So if we think about digital health in these three buckets, or if you have a fourth bucket, what is most interesting in this sector to you?
Thank you, and really appreciate you guys having me as well. So I'm definitely not a digital health expert. We do have some investments in the space, and 2020 has been quite a year for us. I mean, when you look at valuations, both public market comps as well as the valuations that private dollars are being raised at, it's pretty astonishing. Look, it's 2020. We've all been walking around with these devices in our pockets for close to 20 years. And it's surprising that a pandemic is taken us to figure out how to connect with folks, whether it's in meetings like we're all doing now with folks from around the world, or even our doctors. FaceTime's existed for many years, but we never used it before. I had a question with my doctor last night, and he FaceTimed me and was able to give me a quick script. So I think that this pandemic has absolutely accelerated this digital health trend. And while I do think that when we do return to some level of quote unquote normalcy, over the next 18, 24 months, hopefully sooner, things have changed at the margin, whether it's meeting like this or certainly, this digital health theme that's been really catapulted in the current environment. And so, I've backed a couple of companies in the digital health, digital coaching space. And it was almost like a switch was flipped in March, where all of a sudden, I actually had a board call with one of my companies this morning, and we have so many inbound requests. As the CEO put it, we were wondering if we were going to survive at the end of last year to really trying to figure out how the heck we're going to scale and meet all of this demand. So, it's changed at the margin, and I think certainly, some of this change is here to stay.
Great, thank you. I couldn't agree more. And like to give context, like one of the companies we invested in, it's called Helium Health, and they do EMRs across Africa, where less than 30% of hospital visits are recorded. So solving that problem is a problem worth solving for hundreds of millions of people. Karine, as you think about digital health and kind of healthcare inclusion and the move towards making sure that hundreds of millions, if not billions of people that previously had no access suddenly have access. And is this a trend that is more on the impact side? Is this a trend that venture is going to fix? Where does this lie? And is there perhaps a new way of thinking about venture impact or conscious investing that allows us to put structured capital around people that are looking to do well and do good?
Yeah, I actually think I definitely think there is. I think we're starting to see even more. I mean, we're already seeing this, but I think even more so this year of kind of an emergence of mental health companies that are coming up. And I mean, the idea of being connected across, with the idea of digital health in general and telemedicine. But I mean, like even looking at the impact side of that with the mental health space and kind of, I want to say almost a sense of normalcy that's coming to the space in general, with a sense of like letting go of a lot of the stigmas. I mean, you can see that even in the Middle East, which is kind of the other extreme, I would say, in terms of conservatism in that space. So, I mean, like we're definitely seeing a shift. We're seeing people are latching on to that space a lot more and realizing, I think all of this is kind of shifting the way that we approach things. I mean, like just understanding that we can just even talking about connection and being as connected. And I think, in terms of the impact piece, it comes down to the assessment when you're looking at a company, really understanding all the different kind of points, assessing not only on a quantitative level, but also on the qualitative level, understanding the level of which the support is being applied, how it's being applied, how, what the reception is like, what the referral rates are like, and really understanding further the teams. And I think, this year, with, you know, a lot of the movements in the US, such as the Black Lives Movement, and things coming up in a much more kind of confronted way, there's, I think, a sense of normalcy with that whole space, and in the sense, like, you know, there's an urgency to speak about it, and there's an urgency to address it. So I think in terms of impact, it really comes to your due diligence as a VC to really make sure that there is the impact space that's being addressed. And I feel like this kind of connects, but I mean, we're seeing a lot more governments kind of coming on board to really support the VC ecosystem. And I do think the pandemic has accelerated in a positive way as well, where they're starting to see the urgency of how tech can be applied in spaces like such as impact and really driving that forward.
Great, thank you. Random question. Would you do healthcare as a family office? Would you do health tech in Africa or health tech in China, knowing that the Chinese demographic is aging and the chance that they're actually going to do robotics much faster, better than anybody else to keep up with that? As a pure financial investor, which would you do? And then as an impact-driven investor, which would you do?
Very good question. So as a family office, we are getting more and more involved in the Chinese ecosystem because I would say also because of the size of the market and the urgency, and also just in terms of tech innovation, really understanding that that's a hub that we shouldn't ignore. And given that we really believe in the sense of globalization or connection across various regions, I mean, I mentioned we're kind of based across different areas. I think we can't ignore that space. So in terms of like an investor as a family office, that's definitely a space that we're looking at. And I do think, again, I think the due diligence piece, like you could really instill that on an impact basis as well. I mean, that's a huge criteria when we look at companies. You know, it's something that we're incorporating more and more nowadays, and really it gets, I mean, we sometimes make decisions based on something being impactful or not in that sense. And then obviously, I mean, Africa, it's an emerging market. It's important to address it. It's important to look at it. But I think being a little bit more careful in understanding I mean, just like any investment, obviously, but the different source of applications, the reach is really big when it comes to impact. I think it's not only that it's addressing an area that really needs it, but really understanding East versus West Africa, the regions that it's tackling, the various problems in the different regions. And I would say even language. Language is a really big piece to consider, where in China, you're addressing a much larger market and everyone speaks the same, you know, well, maybe different dialects, but essentially the same language. Whereas in Africa, I think the regionality of some things are really worth considering. I mean, we've partnered, for example, with Acumen, the Acumen Fund. So that's kind of a nonprofit, for-profit model. They're starting small and they're looking at smaller regions and smaller areas.
Great, thank you. Okay, so diving a little bit deeper into companies. And Dr. Ossama, back to you. As companies try to survive this crisis, pivot, and feel like they're starting to come out of it, you know, as an investor and or as an entrepreneur, what are some key pieces of advice? Who are the survivors? What have they typically done to survive and thrive after such an economic shake-up globally? Sorry, it's late here. And you know, and what are some kind of key bits of wisdom that you can share for investors as they seek to invest in companies near the bottom before things pick up?
Well, thank you very much. I think you know all the answers. I mean, obviously, mentorship can be of great help. Equally importantly is strategic partnerships. And I'm saying this because there are so many universities like Stanford and UC Berkeley and institutions and corporations and family offices that are very interested to reach out to people that have a value proposition that can have an impact. A very simple example, getting back to healthcare for a minute, as Karine was mentioning, we had actually a conference last week with the Koreans. And even though the Koreans are very focused on electric vehicles, they actually wanted to focus this time on healthcare. And we had 7 of our companies making presentations to them about the value proposition. And in less than 24 hours, they reached out, for example, to a company that has cancer treatment to enter into a partnership for the use of the value proposition. What will this do to the company? It will provide them with corporate venture capital financing. It will provide them with the opportunity for business expansion in Asia without spending a penny in setting up a marketing and sales office. In the case of the family offices, I've been unbelievably impressed, for example, in Saudi Arabia, to see family offices or families that actually have hospitals and coming in not only to make investments in companies here based in Silicon Valley that have value propositions that can save lives in Saudi Arabia, but also to use these value propositions almost immediately. And surprisingly, to be maybe one of the first countries outside of the United States to use them. We live in an amazing, amazing time when I guess, as we have heard, close to $40 billion have been committed to SPACs, special purpose acquisition companies, that are actually now putting $80 million, $100 million in companies that sometimes have no revenues at all, and getting them public to help in the acceleration. And finally, I'll mention just one example. The University of British Columbia in Vancouver, Canada, all the way at the west, started an initiative 6 years ago called Personalized Medicine, and that's to treat patients without the use of drugs. We have maybe 12 companies every quarter coming in, and they're connected to mentors and what have you. One of them that started 4 years ago, surprisingly for them, received 3 months ago $170 million contribution from the Canadian government to accelerate the deployment of their healthcare service. And if I may say, because it has been public, it actually went public last week at a valuation, this is a spin out, of $15 billion. And that's how much interest there is today in ensuring that there is good healthcare provided to everyone who needs it.
Thank you. So that's some general advice and some specific advice. We appreciate that. I'm going to go to like my last couple of questions. We have 10 minutes left. So if the audience does have any questions, feel free to post them. We've received 1 or 2. Thank you, Philip, for responding very accurately to that and an exhaustive response as well. My last question. So Mathew, Paul, whichever one of you unmutes first can go first. And if not, I'll pick one of you. There you go, Mathew. So what company are you most excited about right now? You're not allowed to say anything in digital health. You may choose agriculture, but there's also future of work, robotics, and about 16 other industries that are picking up steam, e-commerce and so on. What are you most excited about right now? Give us an example of a company that maybe you've seen in the last week or 2 or 3 that you've said, I think this is a winner. I would love to learn more about what they're building and the founder.
Sure, and Paul, feel free to jump in after. I think, for us, 5G is a space that we believe it's a once in a generation opportunity. And when we talk about 5G, just for the viewership, we're not just talking about implementing 5G, the infrastructure, which we see as a $1 trillion opportunity. We're talking about the economic layer that results from 5G being implemented, which we see as a $14 trillion opportunity globally. Every country in the world is working towards 5G. It has impact on so many areas of technology, digital health, autonomous driving, AI. The latency is really the zero latency is a really important area. So we're very bullish on that. Actually, our venture fund that we started is anchored by NTT, which is one of the largest one of the largest telecoms in the world, but it is based in Tokyo. And we're independent of them, but to Dr. Ossama's point, a lot of what we do, and I'll get to exactly your question, but a lot of what we do is we invest in best-in-class technologies, but we also want to be strategic investors. So we help our companies grow into other parts of the world where we believe there's tremendous opportunity. Japan being one of them. It's the 3rd largest economy. I have 2 great partners there, multi-generational venture capitalists who are able to penetrate that market. And if you can get into Japan, you can then penetrate the rest of Asia. If you can get into Saudi, you can potentially penetrate the rest of the region. Obviously, we want to bring the best in class. So this gets into sustainability and things that have impact on the world. That's For the family office I run and the prince that I work for, that's a big part. We want to create jobs, improve the quality of life, make the region better for the whole demographic. One of the companies that we're very excited about is a company called Parallel Wireless. It's actually founded by a serial unicorn founder named Steve Papa. He founded Endeca. I've known him for 20 years when he was at Harvard Business School. Endeca he sold to Oracle. He then founded Toast, which is a restaurant software company. And Parallel Wireless is an O-RAN 5G technology. We're invested both as a family office as well as a fund. We believe that the technology really has the ability to make 5G more efficient, to be able to connect more people throughout the world, especially in the Middle East, where connectivity in rural areas can be challenging. And that has implications for public safety, for all types of important issues that are being faced. So sorry that's long-winded, but that's sort of a company we're very bullish on.
No, that's fantastic. And I think 5G is something that, it has been missed over the last few months as, a high growth area. Paul, what are you most excited about? What's a company that you're looking forward to learning more about and helping grow?
Well, I'll just talk about a company that's on my plate today. And incidentally, Mathew, I know Steve, he's a Boston guy. I'm deep in the trenches, maybe unpopular sector given this focus on kind of healthcare and technology and this forum, but I'm deeply invested and involved in a company in the waste space in the northwestern part of the U.S. It's a company that we've helped fund and grow for the last 5 years. There's a huge need in America for additional landfill and waste space. I just think about how much trash is outside my house twice a week for pickup by the trash trucks with all the Amazon boxes coming in. And that's only accelerated certainly in the pandemic. So we're building a vertically integrated waste business out in Utah and have built the largest landfill that America's seen in the last 20 years. And we're using all kinds of pretty interesting new technology in the environmental space around waste to energy, as well as a lot of solar to power our plant. So it's more of an infrastructure play, and we've actually got a large Middle East investor invested alongside us.
That's fantastic. I love how everything really does converge along, the sustainability, impact, social impact line these days, whether it's venture, private equity, and so on. Last question then for everyone, and I'll go around. Predictions for 2021. So, the predictions have started to come out. We've seen some online today. If you're in the venture space, they become very interesting at some point. So I'm going to start with you, Dr. Ossama, since you have, let's be kind here, but you have probably the most experience with predictions post-crises and just predicting every year. So share with us your wisdom. What are some predictions for 2021?
Continuing collaboration between countries and between institutions, more and more entrepreneurs coming up with ideas that are correct by design. And the two bottom lines are always human impact and value creation. It's going to be a wonderful year.
I am so pleased to hear that, especially the last part. I think the human and value creation is important. And I'm really glad that the world is starting to finally align capital with values. Karine, any 2021 predictions?
Yeah, I completely agree with Dr. Ossama. I think we're starting to see, how connected we actually can be. So I think the emergence of other markets, other regions that will really support the US or interconnect with the US, the understanding that it's a back and forth. And then I would say, there's, a need and urgency, especially like looking at the fires that are happening across the world, the instability of things, like just really pushing the sustainability side. And I also agree about, the waste management, all of that. So I think there's definitely a movement towards that more and more. And the different sectors we spoke about, but I think there's an interconnectedness that's going to start emerging even more, and a strength in other regions as well. And I do think the MENA is going to play eventually a much larger role and continue to play a larger role in that ecosystem.
I hope so. I hope you're right. That would be awesome. Paul, you're unmuted, so I'm going to ask you before Matthew. 2021 predictions.
2021 rates remain low. I think gold continues to do well. I think, surprise, surprise, I think with Bitcoin, almost about to crest 21,000 a coin. I think we probably see some kind of near-term pullback, given that Mike Plummer was asking me about it last night. I think that I'm less bullish on overall markets. Seems that all the investment banks are predicting 10 to 20% up. I actually think we probably start to see a continuation of the rotation out of growth into dare I say value. And I know I'm not short innovation. Bonds are trash. So there's my predictions.
Thank you. Matthew, and then I'm going to ask Priya and Philip to wrap up the call and ask them for their 2021 predictions too. And Andy, if you're up for it. But let's go with Matthew first.
Yeah, I mean, I agree with everything that's been said. I would say one thing that's somewhat unique is, we're not in a recession, and whether, depending on where things wind up, there's a lot of pain being felt in the world. There's a lot of artificial, I think, feelings based on a lot of the stimulus packages, especially here, that have been in the United States. So the question is, if there is a recession, which may come, may not, but a lot of unicorns have come out of recessions. And you look at Airbnb, you look at Uber, even historically, Microsoft, GM, Apple, some of the top, GE, I believe, some of the top companies. So, it's an exciting time for venture. We're very bullish on the Middle East. We think Saudi, has a potential to become the next Silicon Valley. That may take some time, and there's a lot of things to discuss about Saudi, but we feel really good about where technology and venture are headed in 21.
Fantastic. So do we. Philip, 2021 predictions.
Yeah, I hadn't quite thought of this. I'll be putting that in my forward, but I think to piggyback of what was said, I think that from the data that I showed you, Saudi Arabia will surpass Egypt, both by total number of deals and total amount of capital that's being deployed in the kingdom. UAE will still stay ahead next year, but that will begin to get closer and closer. I actually believe that there will be more record exits next year. I think there's a delay in some of the M&A activity that's happening this year, and that will spill into next year as people will publicly start merging and acquiring. I think you'll see more disclosed failures of startups in the region and more people coming out to see that there actually have been companies that have failed in the current environment. And there's some learning lessons that will come from that. And the final one is I think that we will see more interest from Asia in MENA in next year as we see more companies looking to arbitrage the valuations and the inflow of capital. We've been in discussions with many different Asian entities that are interested in the Middle East, and they see that as a natural progression as opposed to necessarily the US or Europe.
Fantastic. I love how specific that was. I'm on board, by the way, with everything you said. That would be awesome. Last words go to Priya and Andy. Priya, predictions for 2021.
Yeah, I'm going to have Andy start and I'll close the note. Andy?
Fantastic.
Okay, sure. Sorry about the lighting. It's always really tough this time of day and where I sit here. But great conversation. So, it's been a really strange year for many, many reasons. That's an understatement. In the US, we have, as Priya was showing, the quantum is down, but by dollar volume, actually 2020 is looking like it's going to be greater than 2019, which was the second highest year on record in terms of US venture capital invested. So a lot of momentum going into the end of the year. We have some IPOs. Everybody's been tracking DoorDash and Airbnb, but we have Wish going out today. There are a number of exciting IPOs happening, which I think will just add to the momentum as we go into next year. In terms of our global markets, we've seen a very similar pattern that I would put MENA in as well, which was a more severe correction when the pandemic kicked in because of the uncertainty. And I think newer ecosystems by nature were a little bit more conservative when that happened. But people have figured out a way to do deals, and I think as Philip was saying that as the lag time passes, you're going to see more deal activity. We're certainly seeing it across all our international geographies. And so again, some real reason to be optimistic for 2021.
Fantastic. Thanks, Andy. Priya?
Thank you, Andy. Thank you, Noor. I just wanted to say +1 on what Andy said and what everyone said. We're very, very excited about the region. This is a start of many, many conversations to come in 2021. We're looking to do this more and more with Takwadi and MEFCA as well, with Noor and team. So thanks, everyone. Thank you for joining us today. And huge thanks to the panelists for sharing incredible insights. And Philip, loved MagNiTT report as always, and looking to do much more in 2021. Thank you, everyone. And that's our
Thanks, everyone. Thanks, panelists.
Thank you.
Thanks, Priya, Andy. Bye.